Hi there, this is Pookie's Revenge, and I'm just making this very brief recording to explain a strategy that is foundational. It's not going to make $1 million overnight, but I love it. I use it all the time, and I want everyone to practice with it, collect your own data, make sure everything makes sense, and then determine whether or not it's worth using for you. And as always, just practice, right? The main goal of any strategy as a new trader should be something that's easy to follow, something that's easy to identify, and most importantly, something that you don't have to think about. Because when you have to think, that distracts you from the real goal that you're trying to achieve, which is studying yourself. You have to be able to study where you're deviating from your plan, and more importantly, what's causing it, so that you can kind of iron out the kinks early on while things count for less, because once you get up there in the numbers, those same lessons are going to get learned, but they'll cost you a lot more. So that's our goal today, is I'm trying to get you a little bit of a discount on that market tuition that everyone kind of inevitably pays. So I've learned the lessons the hard way, so I'm trying to teach you guys so that you don't have to make the same difficult decisions. All right, so I just have a random chart. This is HIMS. I just pulled this up and I went to just a random spot in the chart just so I can walk you through this strategy, but it's a very visual strategy and it's very simple. There's only 3 things I like to look for. So first off, what I'm going to do here is I'm going to add the 20-period moving average. And if you're not sure how to do that, if you're a brand new trader, you go to, if you're on Webull, for example, you click this right here, indicators. You can click this indicators dropdown, and since it's on the main chart, it's going to be here under MA. All the sub-chart stuff, like the RSI, the stochastics, they're all down here. But the moving average and the Bollinger Band, which we're going to talk about today, they're up here in the main chart area. I already have them added, so I don't need to do anything crazy. And I've got this setting here, the length set to 20, and I just have the first one checked and it's green. So you can disable all the rest for this. You only need one line. And again, just to reiterate, the specifics of the strategy don't really matter. I kind of talk about this a lot on my stream, so don't worry too much about, one strategy being better than another, because it's all just a load of BS, so don't hurt yourself trying to get the right one. Just pick one you can identify and follow, and focus on yourself as you're practicing these things, because again, that's where the real value is. And then you can just plug and play the strategies. As long as they prioritize risk management and disproportionate take profit, you're probably going to be okay. So, well, we've got the moving average. Okay, just pretend this is the moving average. First criteria is we want a positive slope, so we want it to go up. If we're looking at it from left to right, we want the value of the moving average to go up. So if I come down here, you can see this is a positive slope right here. It's a negative slope right here. And if you're ever curious if something's kind of like this, you could put your eyeballs right up here and you see this green number. You can see these numbers are going down, then up, then down, and then finally back up with some good aggression there at the end. That's what we really like to see. We like to see an uptrend. We're going to see that the overall bias is to the upside. And really what we're looking for is these little pullbacks. And this is kind of where trading gets interesting, because we have these dynamic levels of support and resistance. And all we're doing is trading the compression into these zones and the release away from them. So again, it doesn't have to be the moving average. It's just one that I like to teach because it's visual and it confirms the trend bias. You can use any number of strategies, but the overall process of compressing and releasing is what we're after here. So if this is price, let me turn that off. All right, if this is the price, or where the pressure is, right? Oops. We really want to see it compress into that line and then release. We want to see it compress in and then release, and compress in and then release. And eventually when you get over here, it releases and then it just compresses and then it snaps the other way. And that's where risk management comes in, because what we're going to do is we're going to find a way to prioritize making sure that our losses, our biggest loss, should always be smaller than our smallest profit. So our smallest profit should always be larger than our biggest loss. And that's what most people get wrong, and that's why they hurt themselves. So we can fix that. In order to fix that, we need something mechanical. So what I can look for is then, now that I've got this set up, right, the price is above the moving average has a positive slope. Okay, that's all I care about so far. Now what I can look for is a small red candle. Okay, that's all I need. I just need to see that the price is coming into the moving average, or whatever level I'm using, because this tells a story. It says, okay, price is pushing into this level. It's compressing into the zone where it's compressed historically. It should be kind of a contention point, okay? And there should therefore be a bounce back in theory, right? Because not always. And that's where the second half of this comes in. And I just want to see a candle push over the open of that red candle. So in this case, it might have a wick. It might have a wick down here. It doesn't really matter. I just care about the red body when that candle closes. And more specifically, I care about where that candle opened. All right, so this is my entry threshold, because that tells me that since this candle opened, the price came down here and it closed lower towards the moving average, towards that line of compression. And then the price went down some level, right? And then compressed back, released back and snapped over that level where the candle opened. So this is kind of the last stand for the bears. And then once they're overtaken by the bulls, in essence, obviously when we teach the more advanced section, we understand that's not really what's happening, but it's important enough as a concept. Okay, so once the price breaks over that open, that gives me something unique and something that will make me a successful trader long term, because it helps me do the one thing 90% of traders can't figure out, and that is to stop the bleeding, right? That gives me defined risk, okay? This is the most important part of any trade, having that defined risk, and this is where people mess themselves up. So that's my entry, that's my stop loss, okay? What I can do then is I can take this and I can clone it, okay? And then I can put it up here, and then I can double it, okay? Maybe triple it. I like to triple it personally. It's kind of everyone's preference there, but then this gives me my take profit, okay? And this is how we ensure that every loss is smaller than our smallest profit, and that caps our risks, okay? It caps our losses to a specific size or smaller, which means our profits have unlimited upside potential. Therefore, we should be able to take a bunch of these small losses. One win should knock out quite a few of them, and then one bigger win, one that runs, should take out even more and then put us in net profitable territory. So if it helps to think of it in terms of resource management, okay, this down here minimizes losses, okay? This stops you from bleeding out. It stops you from hemorrhaging because you're limiting the losses, okay? You're not opening the hose completely. So this is layer one of risk management, okay? This is a mitigating factor. So this offsets a couple of these, okay? So that means that some of the losses are just taken off the books as far as net profit goes, okay? This alone won't really make anybody net profitable by millions in a short amount of time. This is really mostly just to offset these losses, keep you alive, and grow slowly, okay? But the real magic is taking profits beyond the target, and that's where we'll learn to scale out and things like that, because that's really that's that secret ingredient that speeds up compound growth, okay? So we'll talk about all that in a little while. But just to make things simple, because I kind of went fast there, okay? We've got a positive slope, we've got a red candle, and we've got a color change. That's all I need, okay? So I'm just gonna erase all these. We'll come back down here and we'll look at it in real time, okay? So if I start right here, okay, and I look candle by candle, right? I see some things wrong, which means I don't have to look at this, right? Price is below the moving average. I don't need to look at anything down here below this line. The slope itself also has a negative, it's a negative slope, okay? So there's nothing I can do here. And then I get price breaking above the moving average, so I'm kind of in territory, but it's still not a good positive slope, okay? So let's just look at it, okay? We'll zoom in super far so we can pretend that we're doing good stuff, right? So from this candle to this candle, if you look really closely, this moving average right up here is 2309. This is 2911. Sorry, 2909, 2911. So this is a positive slope right here. So what I can do is I can draw a line right here and say, okay, this is my entry threshold. So if the price comes back up over this level, whether it's the next candle, 2 candles, 3 candles, 5 candles, whatever, I then know that this last bastion of bearish, like their bearish foothold has been conquered, okay? So that does in fact happen the very next candle, but that also tells me that the lower of these two candles, meaning the, if we think about it time-wise, right? This candle here opened, it did some stuff, and then it went to a low point at some point between these candles forming, and then it pushed back up and it crossed over. So the lowest price that it went from when this opened to when it was crossed over, that's my stop loss. So the lower of these two participating candles, in this case it's this one, that's where I put my stop loss. Okay, so I'm going to erase these, and I'm just going to use a position tool here just to demonstrate, okay? So this is the trade, okay? And then if we're using a 1 to 2 take profit, we would have hit our target on the next trade. Now, it's not a lot of profit, obviously. It's 0.68%, but you guys get the idea. the concept scales up. This is the 15-minute chart, and it's a very flat slope, so we don't really have too much profit potential here. And then it stalls out and falls off the next trade. Okay, so this alone, again, isn't going to make you a super useful, super profitable trader. I'm sorry. And even if we take this up to, 1 to 3, it's 3 cents shy. That's okay. The real goal here is the fact that we have this minimized risk range. Okay, that tiny red candle, positive slope, all the factors are leaning in our favor, and we took a very tiny risk. It doesn't matter if it's a loss or a win, as long as we don't take like 10 losses to every 1 profit and then not let it run, we should be okay. so again, the price is below here. We get a negative slope for a little while, then price breaks back above, and we start getting a positive slope. So here I have a red candle. Okay, now I can just wait for the price to lower and then raise back over if it does. Let's see what we get. Okay, so right here it does. So we got a positive slope, especially when that candle, the color change happened. We've got a low here to establish where our stop range would be. So that would be our entry right there as soon as it crosses up. Right on the break of that candle, there's our stop loss. And then I'm just going to move this. I'm going to scroll over here a little bit. Sorry, I'm not trying to look ahead. I just want to make sure that we've got a 1 to 3 risk range here. Oops, moving my lines here. I probably should have done this ahead of time, but part of the fun is also just seeing how these work out in real time. So I will redraw this one as well, just so you guys can kind of see it in comparison, because this is where the magic happens, right? Let's see where this goes. All right. Scroll over a little bit. Okay, so right here, it looks like we hit our target. Okay, so we took a 0.6, I'm sorry, 0.34%, so a 10-cent loss over here. And then on this one, we got a $1.14 profit. Okay, so it's okay, right? It's okay to take small losses here and there. If for any reason we miss this trade, let me just erase all these. Okay, if we miss this guy, okay, and we wanted to use this one, it does not matter. It doesn't mean every single trade is going to be a winner. It just means that we have a set of rules that we can follow consistently from start to finish. And I'll talk about taking profits and stuff after this, that can help us identify what specifically we're struggling with when it comes to our trading, because that's really what matters. It's not the end result. It's not a win rate. It's not the overall P&L your first year or so. It's the ability that you have to follow, or the inability to follow your trading plan, which should be very simple. A lot of traders tend to make this stuff way more complicated than it needs to be. Less is more, right? You should spend most of your time figuring out why you're struggling as a new trader, because you're a human. And I talk a lot about the psychology, and I talk about the evolutionary disadvantages we have, our brains have, and how the market is structured to kind of exploit that. In my other stream, so I'm not going to ramble too much. I know the Rags to Riches students are probably going to see this, and it's very, very easy for them to accept a lot of this information. It's very easy for them to identify it in themselves, and I'm super proud of those guys, but let's keep pushing with this one. So here we get another red candle, and again, we have a positive slope. That's my first criteria at all times. Price is above the moving average, you've got a positive slope, small red candle. So I could draw a line. Price doesn't break over it. Instead, we get a lower red candle, so we can move our line down. Okay, and then we get a price break right here, which means I have an open, I have a low, and then I have a target. I've got defined risk, defined profit, and in this case, it would have just happened to have won. Right? Doesn't mean they're always going to win. It just means in this case, it happened to. And that's all I care about. Right? So far, I've got 1 loss, 2 or 3 wins, maybe. And trend is friend. Like, a lot of people see the appeal of picking the absolute bottoms, and it does feel good. I'll tell you guys, once you learn how to do that, it's a beautiful thing. But if you can't, it's going to be a very painful thing, and you're going to have some difficult discussions with your spouse. So is it worth it? Not necessarily. So in this case, this one would have just been a loss, right? It moved, looks like, after hours, and that's okay too, because we don't have to trade stuff after hours. This was an entry at 10 o'clock in the morning. If you're not a swing trader, or if you don't feel comfortable holding overnight, you don't have to. You could have easily taken your profit somewhere up here, or at the last push up here above your break even, you could have set a stop loss right above that, just because it's up, right? Otherwise, you just take the loss, and that's okay. So here we get a negative slope. So right here looks like we get a slight positive slope. Okay. And this is what I'm talking about. Just get out there and collect the data for yourself. Don't trust me. Don't trust anybody. All right, just get out there, get a clean, simple strategy that you can identify very easily with very few steps, right? You don't need all this craziness in there, and just collect the data. Okay, so in this case, that would have been another loss, and don't worry about win rates. That's a BS metric. It's made it, people use those to sell like BS products and stuff. Don't worry about any of that. It doesn't matter at the end of the day. It's all about your disproportionate take profit, your minimization of risk, and your consistency. Okay, so here we've got a red candle here, but a negative slope. Okay, and then we get a positive slope when it crosses over. So this counts as an entry. So let me go ahead and draw that. So I've got my open, I've got my low, right? So it opened here, went as low as this, and then came back up and crossed over. Therefore, I can draw my levels. Do a 1 to 3 on this. Sorry guys, it takes a minute. All right, and one of the most important rules that I have for myself is that once I have this trade set, I don't touch it. I don't move my stop loss up. I don't move my targets down. I just let it play out the way it is. And you can see sometimes it just goes that way for a very long time. So if I was in this trade and I didn't want to hold overnight, I could have sold right here just above my break even. It's okay. Otherwise, we hit target the very next day. Okay. And obviously it kept going, right? So what do we do in this case? Because this is where, again, we want that third layer. Okay, we got the first layer here, which protects us from bleeding out massively. And that's where most people just mess themselves up. It's not profits that take people out of the market, it's losses. So we need to focus on those first. That should always be priority in my opinion. I can't legally tell you guys what to do, but I can tell you what makes sense and what I don't do. All right. So, you know, prioritizing making your losses small should make sense in most cases. Then making sure that the profits that you do take are larger than those losses, and then making sure all the bias factors are working in your favor kind of makes sense, I think. It's very hard to argue against that, okay? And there's always going to be some random factors in the market, and that's okay too. You're going to take losses, but again, that's where that layer 1 protection comes in, because your risks are very small. They should be very small. So the third layer, right? We got the first layer is your stop loss, second layer is that initial take profit, and this is where we kind of get a little bit more dynamic, okay? So in this case, once it hits that target, right? If it hits this level or this level, that tells me it's time to take action. I'm not anticipating. I'm letting the chart tell me it's time to do stuff, okay? So when that happens, this kind of becomes irrelevant, right? Because at this point, I'm only really focused on my stop losses, right? Because that's my stop loss, okay? And my target was somewhere up here, right? I don't remember exactly where it was. This was our entry. I could just redraw it, but I'm too lazy. So let's say this was our target area, right? So we locked the majority of our shares. So what I like to do is I like to say, okay, I've got, you know, 100% of my position. I want to lock maybe 75% of those shares, and I want to just take them off the table, okay? And what that does is it takes the bulk of your cash, the bulk of your profits, and it locks them in. And then that means that the remaining 25% has to go 3 times farther against you in order to give these back, okay? So we don't want that to happen, and we don't let that happen because our stop loss is in place. So it can't go all the way down here off the chart into the depths of hell because your stop loss gets in the way and it cuts it, okay? So that guarantees you a net profit, and that's another layer of protection that we can use, just common sense, right? If I know that I'm at target and I want to let it run, I can lock the bulk of my shares, guarantee myself a net profit, and continue to let it run. That's the best of both worlds because, yes, it's going to cap your profits a little bit, but your losses are still small and inconsistent, and your profits are uncapped. So maybe they're a little bit limited, but they're not really limited, you know? So I'll take that in exchange for a potentially losing trade and giving up something that was at target just because I'm greedy any day, right? So we can lock the bulk of our shares. I personally like to lock about 75%. Everyone's a little bit different. That's okay. And then all I care about is looking for 2 patterns, 2 very distinct patterns, and they're very easy. This is all just shapes and colors, okay? So the first pattern here is going to be almost like a V shape, but it's not always a V. But what's important here, and those who've used maybe fractals are familiar with this, is that this middle candle here, okay, this guy doesn't have any competition on either side for some number of candles, okay? So I use 2 personally. Some traders like to use 5, some like 10 for the bigger ones. I just like 2, okay? And that just tells me that, you know, for the next, you know, 2 candles worth and the previous 2 candles worth, nothing was able to push the price down as low as this. So this is a validated low, right? Price came in, pushed down, pushed back up. So it's another form of compression and release. And then the other part, oops, sorry, let me just put all those back. Oh. My drawings are all messed up now. Sorry about that. So the other part, the other 5 candle pattern that I like to look for is, oops, we're getting some ghost images here, sorry, is similar to this in that it's just a straight line, right? So for this pattern, every single candle, 5 in a row, where this condition is met. So I look at any series of 5 candles, and it's usually one of those 2 patterns or a third in between, okay? So if it's this one, every single candle will have a higher low than the one before it for 5 candles in a row, okay? If it's this one, then we've got that validated low in the middle, and this only becomes validated once this one closes, okay? And same with this one. This is only a 5 candle run, or bullish impulse in this case, if all 5 candles are closed and they have higher lows. Okay, so how could we use that information? All right, and what I can do is I can say, okay, chart, you've told me when to buy, you've told me where I should cut my risk, and you've told me where I should lock most of my profits. What else can you tell me? Okay, and then you can, hopefully no one's around you when you're talking to a chart, but you know, you can say, okay, well, let me look for some patterns. Okay, so if I'm looking at these candles, I'm just going to turn this moving average off because it doesn't matter at this point, right? We're in, we got our stop loss was in place. We locked the bulk of our shares. Now we're just looking for the trend to tell us when the trend is over. Okay, so the 5 candle runs are good for identifying technical bullish impulses and technical bearish impulses if you're to the downside. The validated lows are good for telling us that those are points of compression and release that are higher than our existing stop loss, so we can move those up. Okay, so in this case, I am above my target ideally, right? We're somewhere up here was my target. And then right here, I've got 1, 2, 3, 4, 5 candles in a row. So if I just zoom in, each of these 5 candles has a higher low than the candle before it, except for this guy, obviously. But we've got 5 candles in a row where they all connect with higher lows. I'm sorry. So this is a technical bullish impulse, which means as soon as this 5th candle closes, I can put a partial stop loss and lock some portion of the shares that I have remaining, because this means this is an impulse. Okay, so then if I shift these over 5 candles, this candle right here, it's kind of hard with the crosshair getting in the way. Can't really see it. But this guy has a wick down here, which means that the 5 candle run is over, and therefore this candle tells me that it's time to lock some of those profits. Okay, so I've got 75% of my shares I sold here somewhere. I see a 5 candle run right here develop, and I can sell maybe another 75% of whatever shares I have left at this point. Okay, and then I just continue looking for the next pattern. Okay, so in this case, I get 5 candles and then a pullback, and then that's 1, 2, 3, 4, and then a pullback. So we don't get a full 5, so there's no action to be taken here. 1, 2, 3, and then a pullback. All right, so we get a lower, a pretty low one here. So 1, 2, 3, 4, 5. So if I look at these 5 candles now, I see that V shape that I like. I see that this guy right here doesn't have any competition to the left or to the right. So this tells me I can take that main stop loss. Okay, I'll just erase this target here. All right, this main stop loss where I exit all my shares, no hesitation, no questions asked. I now have a fixed place where I can put that, because these 5 candles told me that price is compressed into the zone and released to the upside. Therefore, if the price comes back down here and breaks below that compression zone, there's no reason for me to be in this trade, so I can always cut it. Okay, and then I start looking again. Here's another 5 candle set right here. I'm just shifting these over one at a time. Okay, so 1, 2, 3, 4, 5. Therefore, I can put in a partial stop. 6. So I just follow it up as each new candle closes. There's another one, and then we break it. Okay, so this candle right here tells me it's time to lock some more profits. Okay, so at this point, I'm just going to leave this one up here as well. Sorry. Okay, so we entered down here, and we've locked our initial profit. We've locked a portion of it just under this high right here. We've locked another portion of it just under this high right here. We may not even have shares left at this point, especially if we're on a smaller account. But just in case, let's keep going. So this is where we left off. These 5 candles, okay? Let's just shift it one more. Okay, so we've got 1, 2, 3, and then a higher candle here, right? So we're on our way to forming a V, or a validated low. We don't have a 5 candle run to the upside, so this is one of those in-between patterns that we can't really use. But this right here is a higher validated low, so let me go grab that stop loss down here. Let's compress that, and I'm just going to drag this up really fast. All right, and then my stop loss gets to move up again, okay? Now, every validated low like this where I've got, 1, 2, 3 in a row with higher lows, that's 3 out of 5 for those impulses. So here's 4, here's 5. So at this point, I can put another partial stop loss in here, shift it over, and we break it. Okay, so the goal here is really just to repeat this process till we run out of shares. Okay, and that's all it really takes. And then you're just going to probably see a series of these higher validated lows and the 5 candle runs. And that's all I really care about. So here's a higher validated low. And then eventually right here, we break it completely, which means there's no reason to be in this trade at that point. Okay, so at this point, we've had a pretty good run. Okay, we've entered somewhere down here. I can't remember exactly what candle we were using. And then we locked our initial profits. We got a 5 candle run, maybe another 5 candle run. Then we got a higher validated low, another 5 candle run, higher validated low, another 5 candle run. That looks like another 5 candle run, but I didn't mark it. Then we get a higher validated low right here, and then we eventually break it and exit the trade. So this trade right here, somewhere around 15.5% with 0 guessing. Okay, and that's the goal. So if I just have a checklist, okay, that says, hey, I want positive slope on the moving average, small red candle, I take an entry on the break of that, I put my stop loss at the low, and then I take a disproportionate take profit, and then I have a series of steps that I can follow for, letting things run, I should be in a pretty good spot as a trader. The only caveat here is that I need to be able to follow that plan, and that's where my effort needs to be spent. Rather than just trying to figure out a strategy, we can just do something simple like this, and then our energy can be spent on identifying why we're struggling to follow it, right? There's always going to be FOMO. There's always going to be, I'll tell you right now, for example, right? Just as an example, most people that have a savings account are going to get paid a guaranteed 1 to 2% this year, right? That's just the net yield on a bank account in most cases, okay? But if that same trader were to take the entire portfolio, okay, and put it into one trade, like this one right here, and get 3.67% profit on January 1st, they would not be done trading. Even though they've almost doubled what their bank account gives them, they would continue to trade and continue to risk it. But most people trust a bank account more than the stock market because the bank account is consistent, okay? And that's just one of those flaws about our brain that we need to identify and overcome. So if you can outperform 1 to 2% in the market, it makes sense to me to keep most of your money parked in a savings account, okay? And again, I can't tell you what to do, but I can tell you what makes sense to me. If you have access to a 401k and that's going to outperform that bank account, it makes more sense to put the money in there, right? There's contribution limits and all that good stuff. If you're able to do dividends and passive income and stuff, and you can get 12 to 30% a year, it makes more sense to put your money there, right? You can do CDs, you can do mutual bonds, municipal bonds. There's all kinds of other forms of investment that don't necessarily mean look at candles and buy things, right? Because that's what hurts people. Now, most people are going to see something like this. They're going to say, oh, look at this. It's a huge sell-off. I know which one of these is going to be the bottom. We're going to buy it right here, and we're going to expect the price to turn around immediately because we're in it. That is a very ego-driven thing, and it makes sense because our brain wants to be rewarded for our time, effort, and attention. But that is not how it works out in real life, and that's where people hurt themselves because they see, oh, we get a little bit of a profit, right? We pulled down, we compromise, we say, oh, it'll come back. It's overextended, blah, 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 all that other stuff we lie to ourselves about. It does come back to break even, and then we're like, oh, well, I want to get compensated, so I want to not just break even at this point. I'm pretty confident it's going to keep going up because we compromise, right? We make up a bunch of stuff and tell ourselves, and then, oh, we get a support here and high consolidation, all that good stuff, and then a final blast off, right? That's one of two directions that could have gone. That could have gone straight down. In this case, you would have been rewarded for taking an unhealthy risk, and that is confirmation bias that cements in those behaviors. And in the instance where that shot to the downside instead, right? Now you're down here hoping it comes back, and you're beating yourself up for not taking your position out when you were back at break even or above it because you wanted more, and that there's a special type of guilt that comes with that and a regret. And we can avoid all that stuff by just letting the chart tell us what to do and listening to the chart. So I don't want to make this video too long, but I did want to just walk through a very, very simple strategy that, again, I can teach you guys this in about 5 minutes if I really just talked about that. It's just positive slope, small red candle, color change, right? That's all I care about. And then just letting it run. You got your 5 candle runs and your higher validated lows. Very easy, very simple. So what I would like you to do if you're watching this video is go out, backtest, find one specific example of this, okay? Doesn't have to be anything special. Doesn't have to be a winning trade. I don't care about the end result. I just want to see that you guys can identify this stuff. And let me just, I'll pull up target, right? Just a random one. Just erase all this. We'll look at the 15-minute. I'll just zoom in, okay? So if I'm looking at this chart right here, this is a entry, okay? That'd be the entry, and this one would have been a loss. That's okay. This would have also been an entry, right? Notice we're getting lower entries on these. That would have been a profit. So you're only going to run into so many of these lower red candles before you run into the moving average, and it either turns negative or you go below it. So it's just a war of attrition. It's a math game. We don't really have to worry too much about this stuff. Now, there's one more step that I wanted to talk about, and that is adding a Bollinger Band. And the reason we want to look at that is because that will limit the risk range, okay? Because one of the most important and most common questions I get asked is, when should I not take an entry when it's too far above the moving average? And in this case, if you're familiar with the Bollinger Bands, you'll understand that the midline is the 20-period moving average by default, right? So it's just adding another a line here and a line to the bottom, which I've hidden. And those are just standard deviations. So if you haven't taken statistics, basically that just means that you're measuring the average moves away from the moving average. You're squaring them, averaging them, and then square rooting them back down. So you can detect the average deviation, essentially, which is a little bit more sensitive to more drastic moves. So like in this case, you got a very drastic move here, therefore the band expands. You don't get a lot of variation away from the moving average, so the bands are very narrow here. So a very high-level concept, but it's something that we can use. So in this case, if I've got a 20-period moving average and I've set the width to 1 because I want to do 1 or less standard deviation so I can have acceptable price movements, not abnormal, I would be passing on this entry. Okay, and I'd be passing on this entry, and I'd pass on these entries. And then right here, I do have an entry. I got one right here. Okay, that would have been a super tiny loss. I got another one right. I'm not going to draw all these out because the Webull interface is clunky. But you can see I've got a small loss right there. I've got a small pop right there, and then a loss right here. I've got a small pop and a loss right here, and then right here I've got another entry that I can just draw. We'll draw this one. Okay, and then this one would have hit target. Okay, this one opens up here. Price breaks over way up here. This one is below the moving average, so there's no sauce here, plus it's a negative slope. So no reason to enter this trade. I know exactly where I want to enter because the chart tells me it's time to enter. I'm going to skip on this one because it's above that standard deviation line. I'm going to skip this one. I'm going to skip this one. I'm going to skip this one, and this one, and this one. So all these are just above the level, and that's all I care about. This one right here is a clean entry. I'm going kind of quick here. I understand that, and I apologize, but this is a very long video at this point. I really wanted to make this very quick. And then, of course, we're below the moving average again. This is above, and then price doesn't really break over here, and we're below. So we get a little bit of chop here, but this strategy keeps us out of the garbage, right? We're not looking at downtrend reversals and things. We're waiting for the chart to tell us it's time when the chart is moving up, okay? And that's all I really care about. So right here, for example, beautiful retouch here, very small risk, okay? This is what I like. I like to see the risk super, super tiny. I'll eat up 10, 12, 15 of those all day long. I don't care. One decent win can wipe out quite a few of those, so it doesn't have to be anything spectacular. And if you're a bear, what you can do is you can just swap this out, right? Just turn it upside down. And then you just do the same thing, but upside down. So in that case, you're looking for a negative slope. You're looking for the price change to, the color change, I'm sorry, to occur within this line right here. So like right here, for example. So there's the open of the bullish candle. The price went as high as this. So again, we're upside down at this point. Okay, we're doing things backwards because we're looking for bearish entries on this one. The color change happened to the downside on this candle. I'm sorry, this candle. And then your disproportionate take profit, and then you've got lower highs until you get to right here. So that would have been your second target. Your first one is here, your second target's down here on a break of this 5 candle run. And then let's say if we get a lower high, yep, we get a lower high, so you can move that full stop all the way down to here. And then you get another lower high right here, and then you would have exited completely right here. Okay, so that would have been your trade. So if we were to just draw that out, that would be at least one of your shares at the very last part would have had a 1 to 6.35 risk reward ratio. Okay, so I don't want to go too far into like repeating this over and over and over again, because again, this is a very simple strategy. I just want to show you guys that less is more. Don't worry about learning all these different types of analysis. It's not going to do you any good. You're just going to waste your time. Just focus on what makes sense to you, okay? And like I said, don't trust me. Don't trust any of this. Don't trust anyone or anything until stuff makes sense to you, okay? So that's the best lesson I can teach anybody, because this is your money and it is your time, it's your life, it's your future. I don't want you to trust me to make your decisions for you, because I'm not the one that showed up to work every day at your job and worked under your boss, and I don't have to feed your kids, you know? So I want you to be able to do that for yourself, and that's why we're here. So if you have any questions, feel free to ask, and don't feel like you have to master technical analysis, because technical analysis ultimately tells us where our risk should end. It doesn't predict price action. I hate seeing people try to predict stuff and then blame themselves when they get it wrong. That is a circumstance, it's not a consequence. So until you understand the difference there, you're probably going to have a pretty rough time, and I don't like seeing that for you guys. So I'm going to end this recording. It's about 36 minutes. This was just meant to be a super quick intro to a strategy, but you guys know how I get when I teach. So hopefully this makes sense. Please feel free to ask questions. And again, the one ask that I have from everybody here is just go to a random chart. Find one example of this on any time frame you want, as long as it's a clean chart. Let me just erase all this. Fibs are another lesson altogether, but you guys see that works pretty nicely. Just find one specific example. I'm just going to go to Uber 30 minute because I like that one. Just find one example, okay? Just scroll back just a random time, okay? If you scroll back and you stop when there's a negative slope in the moving average, like right here, for example, just go forward one candle at a time. Ask yourself, do I have, like, you can zoom all the way in for this stuff. That's the beautiful part. Do I have a positive slope yet? No, I don't, so I have to keep going. Here's a positive slope right here. Is price above it? No. So I have to wait. Okay, I'm just going to keep going. All right, now I've got a positive slope. Do I have a red candle? Is it above the moving average? Yes. Do I have a red candle below the Bollinger Band? No. So I have to wait until price is between these two bands. All right, I want to see the price. Here we go. So we open right here. I've got a small red candle, and I'm above the moving average. So does it hold up? It does not. We get another red candle down here. We get another red candle down here. So do we get price to push back over? We get a little bit of a pop over there. I don't know if you would have gotten filled, but your stop loss would have been there and you would have hit that. Super small loss. It's okay. But we're back below, so no reason to trade. All right, so we're just looking for that positive slope. All right, so we get a positive slope here, and then it's just kind of exacerbated. So this does count as a valid entry, but it just kind of looks like we're cherry picking. We had a positive slope right here, and it just kept going. So in that case, that would have been a profit, and that's okay, right? We're just going one candle at a time, and then that's our entry, our risk range, and then our initial take profit. Okay, now we have to look for that. I'm just going to draw a horizontal line here so I can see it, and a stop loss line down here so I can see that. And then you really just want to just let it play out. You got, not a 5 candle, oh, I'm sorry, you do have a 5 candle run there, 5 candle run there, and then you get a higher validated low right here, because remember your original stop loss is down here, so you can move that up. All right, and then you got a 5 candle run right there, and then you've got a higher validated low right here, higher validated low right here, and then you stop out right here, okay? So that's where you enter and exit that trade. So I have to end this recording now. I'm late for a meeting. I appreciate you all watching this, and I will catch up with you guys next time. Thank you all, and goodbye.